Really nice to speak to you.
It's wonderful
Thanks
to be here.
for being here. And I know that you travel and you talk to clients a lot, and so you can give us a really interesting take on what people are thinking about and talking about at this point. So on your travels recently, if you were to think about what's the biggest concern for investors, what would you suggest? I mean, inflation, AI not a concern, but maybe a huge opportunity, geopolitics maybe a concern. Where does the conversation focus?
Well, given the fact that we are an extraordinarily global business, I've been meeting with investors around the world, and there's a few themes that keep recurring amongst the investors that we work with. The first one is what's going to happen with the U.S. election and all the other elections that are happening around the world, but from a political perspective as well. The second is on geopolitics. How are we going to navigate the ever risky and changing dynamics around geopolitical tensions around the world? And the focal there is on U.S.-China relations, frankly. And the third piece is, as you mentioned, on AI. So how do I invest in AI? How do I take advantage of the upcoming growth in AI? But also, what does it mean for my company? And how do I position my company and my businesses around the world?
So I know we'll dive into a few of those themes. If I think about the geopolitics and the bifurcation of the world, the battle that many investors will cite between the US and China, do the high net worth individuals that you meet, do they feel the need to pick? Do they feel the need to expose themselves to two different systems? How are they navigating that tension?
We're helping them navigate it because as U.S.-China relations are becoming more and more bifurcated, as you said, both countries are turning more and more nationalistic. They're turning inward. But what this means is that the supply chain demands around the world are shifting dramatically. And that means that for investors that are very globally minded, some new opportunities in different regions. So, for example, in China, a lot of flows are now going down to Singapore and countries in Southeast Asia like Thailand, Malaysia, Vietnam, Japan, even India, for example. And in the U.S., a lot more is focused on Mexico and Latin America, given the nearshoring of the region. So what's important for investors to consider is geographic diversification, some interesting opportunities in emerging markets, given the changing supply chain dynamics between the U.S. and China.
Ida, you're laying out a world which is undergoing some quite significant change. Yet I look at financial markets, it's just up, up and away. Are the investors you talk to, are you comfortable with where markets are right now? Do they feel comfortable with the pricing that they see on their screens in front of them every day?
Well, it's interesting because last year's 24% market rally was driven by 7 tech names. This year's 11% roughly year-to-date performance in the markets is much more broad. Okay, so we're seeing a much more broadening of the performance. And as you know, the NASDAQ just hit an all-time high yesterday. So still the enormous upside potential in the tech names as well.
But they feel comfortable with that. So you've got credit spreads super tight. You've got Bitcoin rallying again. Commodities are on a tear too. Are they comfortable with this kind of ever upwards narrative that they see in front of them? Because you have this on one hand, but you've just laid out a whole load of kind of quite significant risks that the markets seem to not be kind of paying attention to. And there seems to be a disconnect at the moment in the world between all of the risks that we seem to be facing and this kind of very, very effervescent market that we see in front of us.
So therefore, it's more important than ever to construct very thoughtful, globally diversified portfolios for clients, just given some of the risks that we're navigating on behalf of our clients. So on the one hand, we have been leaning into locking higher rates for longer, right? Extending duration on fixed income as one way to sort of hedge out some of the other challenges. But on the other hand, we've been leaning into equities more so than ever because we see that there's an opportunity, particularly in small and mid-cap companies, and also in industries like healthcare, like tech, digital AI that we were just talking about, and in clean energy. And some of the parallel industries as well for AI, for example, like semiconductors that are the brains behind the growth in AI, as well as energy and clean energy that are going to be needed to fuel the ongoing growth in the AI phenomenon and some of the other tech phenomenons as well. So some really interesting pockets of longer-term opportunities, both by industry segment, small and mid-cap, emerging market economies around the world that you've got to consider into those portfolios and building a really well-rounded portfolio. And the last piece I'll say is investors in the ultra-high net worth space also have a significant allocation to alternatives. Private equity, hedge funds, roughly a third of our clients' portfolios are allocated there.
I'm so glad you brought that up, one of the tailwinds, or at least one of the bull cases for this market, the stock market, the bond market, is that there's so much money that isn't actually allocated yet to the public markets. Do you agree with that, that there's still money sitting on the sidelines that are waiting to be deployed?
Yes, there is still a fair amount of cash that's been sitting on the sidelines and or treasuries that have been waiting for opportunities. And what we've been seeing over the last couple of years is, again, a rotation into alternative assets, looking at private equity, hedge fund opportunities, direct investing opportunities, because investors are willing to pay that illiquidity premium for some of the potential higher double-digit returns. And also in markets like this, where there is disconnect, and there is some dislocation, private equity and hedge fund managers can really take advantage of some of those opportunities as well.
Well, private equity really, I think, grew and ballooned even more so than usual in 2022 when the public markets and the carnage, they were kind of escaping it almost to find that alternative investment. But in an environment where we're seeing hedging to the downside be extremely cheap, short squeezes show up in the market, what is the incentive to be in private equity right now?
The incentive is that private equity as a whole can achieve a much higher return overall than what you can typically see in fixed income, and obviously even sometimes on the equity side as well. So just having that complement, a different type of return profile, greatly enhances overall investment performance.
Ida, really good to have you with us to talk about markets, but also to talk about the business of running, private banking and the Citi operation there. This is an area that Jane Fraser has obviously been trying to grow, the long-term plan around the wealth business. What does that look like right now? Is this a business that's finally on the path to gaining ground against the competition?
Oh, absolutely. I mean, we are the most global private bank in the world. We operate in 52 different cities in 20 countries around the world, and we are one of the core 5 businesses that Citi is focused on. We're very interconnected with the other businesses. The top clients of the private bank are also top clients of Citi. We work with our clients and their families on the wealth management side, but we also advise their companies on advisory work too with our investment bank, commercial bank, services and markets colleagues as well. So leveraging the entirety of our platform on behalf of our clients.
You talked a couple of times about the sort of huge geographical footprint that you have. Where within those geographies do you see the most excitement right now? You must bop around the world the whole time.
I
Asia,
do.
the Middle East,
Yes.
Europe, America. In terms of where you're seeing the most traction right now, in terms of where you're seeing the biggest buzz, the biggest opportunity, where is it?
Well, there's a global phenomenon that's happening right now. We are in the midst of the largest wealth transfer in history to next-gen and millennials. So $85 trillion are going to pass to next-gen and millennial clients over the next decade, not to mention that women are playing a very critical role.
Yep.
They control a third of the world's wealth today, and that number is going to about a half in the next 5 years. So our focus here on the next-gen millennial and women clients and a full family approach that we're taking in the private bank is going to be significant and very important. So we're leaning into that, and we've made some great traction with the next-gen millennial and female clients.
Okay, where are you seeing that happening? Where are you building out? Where's the biggest opportunity? Is it in Hong Kong? Is it in Dubai, Doha, Riyadh? Is it in Europe? Where is it?
So it's a global phenomenon, but for us, the areas of focus, I mean, obviously is home country, which is the United States and the Americas, but also in Latin America, it's Mexico and Brazil, our 2 largest markets in Latin America. Here in this region, obviously, we've been in London for a very long time. It's a big hub for us, a big area of focus and a big area of growth, as well as the Middle East. And then as we move into Asia, we continue to be very focused on Hong Kong, Singapore, and Southeast Asia opportunities there, too. We've been on the ground for 120 years there, deep relationships, lots of upside still in that region.
How are you accomplishing that goal? In our last 60 seconds here or so, Jane Fraser has talked about right-sizing the workforce. In terms of your internal kind of headcount, your internal strategy, how are you tackling that? And also externally, who are you partnering with?
So Jane has been very bold in what we're doing at Citi. We're simplifying the firm. We're focused on 5 core businesses. We're improving the client experience by reducing bureaucracy in the business. We're now able to execute in much faster, seamless, quicker way on behalf of our clients. I know that the feedback from our clients globally has been very positive, very strong to the changes that have been being made. And we're very excited about unlocking the full power of Citi on behalf of our clients and their companies.